Hi, I created a full charge bookkeeping business in 2017 and have created a course bundle on how you can create a similar business of your own. In this series of content, I am describing for you what it's like to be a bookkeeper for other small businesses. And today I'm going to talk about a service we offer in a project-based cleanup of financial reports. So here's the scenario. Occasionally, my referral network or my website will generate an inquiry on how we can help a potential client clean up their books, and we can certainly help with that. So how does this happen in the first place? There are two reasons that a potential client can come to us with this problem. So one reason is that the business went to the bank and they tried to get a loan, and the loan officer took one look at their books and knew there were issues where the loan would not get approved. The second reason we have seen is that the CPA at the end of the year sees issues and cannot file the taxes because of the problems they see in one or more of the financial statements. We had one of these come around where they had gone to a bank to get a loan. We had our free conversation over Zoom where we discussed their issue, and we did a preliminary review of the financial statements while on that call. And there were plenty of things that we could do for them. Once they signed the contract, we started working on several things. And I advised the clients that we may find other things as we dug into their books, but here's what we saw on first glance. Now, this is an actual client that we worked with. So first of all, when I look at a P&L, the first thing I look at is that top section, that income section. And as you can see here, they have healthy sales. That sales number is pretty decent, nearly $4 million. Okay, so that was not a bad thing at all. But for example, when we look at the cost of goods sold, what it takes to generate that revenue, that was only $53,000. Now, this is a construction company, and you'd think that a company generating nearly $4 million, you'd have a lot more cost of goods sold because you've got to buy lumber, you've got to buy all these different materials, you've got wages to pay, and I'm sure they did not just pay $53,000. So I'm sure that was a huge red flag for the loan officer. Was that, where's all the rest of your cost of goods sold? Okay, so that was the first thing. The second thing is that immediately, as we start looking at this, there's an uncategorized income line. And whenever you have financial reports that you're taking to a loan officer or something like that, you do not want anything to be uncategorized. That is a huge red flag as well. And so who knows what's buried in that uncategorized income, you know? Also, if you look a little further down, there's this account right here called Ask My Accountant. Okay, and that's an expense account right there. And, there's some money in that too. So there's some uncategorized, what we would call uncategorized expenses as well. There could be some cost of goods sold in there. Who knows what's in there? And so we had to figure out what was there. Okay. So those are some big red flags that would be seen. Now, some of these others, we might dive into them a little bit. For example, the contractors, we'd want to make sure that they have W-9s and things like that. Not that that's necessarily important to a loan officer, but as we look further down here, we see there's job supplies. Okay, job supplies should most likely be cost of goods sold. We would ask them, things like, what is included in job supplies? Is this actual work site? That should probably be classified under cost of goods sold. Then as we look further down, we get down here to the second page, and lo and behold, we see there's a container, whatever that is. There's hardware, there's lumber, there's materials, there's this miscellaneous job material. All this stuff here should likely be cost of goods sold, because all of this stuff is, if these are expenses due to a construction site, that is in service to actually generating revenue. And so that should be in that cost of goods sold section. All right. And then we look a little further down, there's on-site project parking costs. That should be cost of goods sold. Project equipment rental. That should be cost of goods sold, most likely. And then we get further down here and we start seeing a lot of payroll type expenses, which that's usually there is some operating expense that is wages, but when you talk about field wage, right? This field wage right here, these are being paid to people who are on the job. They're on the construction site. And so that entire $1 million most likely should be cost of goods sold. And so if you start reclassifying these, once you have the conversation with a client of like, okay, so what's included here? These are actually people working on the site. There's actual materials and all that. And you gain clarity that yes, these should all be cost of goods sold. There's probably about $2.5 million that should be reclassified as this cost of goods sold section right here. So 2.5 million plus that 53,000 is the actual cost of goods sold, which is more in line with what a construction company would be. Okay, that would make more sense. From my cost accounting background, I get that. That makes sense because that's about a 50-50, 60-40 split, between the revenue and the cost of goods sold. So all of those things we could help them fix. Now, as you look at financial statements over and over and over again, it will get easier to see these kinds of issues. Plus, if you take advantage of the mentorship that is available once you finish the full charge bookkeeping course, you could work with my business and learn these things and learn how to spot them, working with our clients and your own clients, etc. So you would learn with our guidance. I created a course bundle at Springboard Training on how to create a full charge bookkeeping business. In that self-paced learning bundle, you will have 4 courses to help you build a plan. The first course is focused on marketing and obtaining that first client. The second course is focused on choosing your operational tools to make you efficient in your business and managing your clients. The third course is focused on the contracts that you will need to manage your clients. And the final course is on the actual creation of the business, which includes obtaining your business licenses and establishing your operational systems. And the best part of all, you can conclude your training with the option of completing a year mentorship with my full charge bookkeeping company. Thus, if you want to learn with training wheels, we can help you to do that, but you will have everything you need to do everything on your own, should you choose to do so upon completion of the course bundle. Do you want to help other businesses to be successful? You can get started at any time. To learn about my company, the Full Charge Bookkeeping Business, I have included the website for that in the description of this episode. And to take advantage of the bundle on Springboard Training, the link to that bundle is in the description as well. Use the code FCBAD50 on checkout to get 50% off the course bundle. That's F as in Frank, C as in Charlie, B as in boy, A as in apple, D as in dog, 50. Thanks a bunch, and I'll talk to you soon.